Educated Economist here. In this video, we are going to be talking about the fear of a recession that is going to be coming soon. This is something that we have talked about quite a bit on this channel. In fact, just about since I've started this channel, one of the biggest questions that I get is, are we going into a recession? Now, this is the same question that has been asked of me for years. And over time, things change that would then give you an understanding of whether or not we are going to go into an inflation, deflation, recession, expansion. There's all kinds of questions that end up coming from what's going to happen in the future when the Fed adjusts rates or when the administration does their thing, or something. There's all these questions that come up from it. Something that I thought was very interesting is that when everybody thought that there was going to be a recession, say just after COVID and the inflation and the slowdown in the economy, and everybody was saying, hey, we are going into a recession in 2022 or 2023 or 2024, and then it never happened. Now, something that I had thought about a long time ago, back during COVID, was we very well may go into a recessionless recession. And now what I mean by that is that we won't experience what it is that we would typically experience during a recession. Like most recessions that we remember from the past, unemployment rises significantly and all these corporations get bailed out. And this usually pisses the people off pretty good. Like politically, it's just a nightmare to deal with, as trying to bail out these corporations and keep the economy going has all these people who are down in the working class saying, hey, what about us? You're forgetting about us. You're bailing out all these rich people. But here down in the lower working class, we are suffering the consequences of not having any employment. And again, this is what most people end up fearing from a recession. Now, something that Janet Yellen had said quite a few years ago, and I misinterpreted what she had said, but what she had mentioned is that she doesn't believe we will ever go into another financial crisis in our lifetime. And I laughed when I heard that. I'm like, how in the world could you possibly say that? It's as if we would never see another recession again. And that's not what she said. She didn't say that we would never see another recession. What she said is that we would never see another financial crisis. And now this is something to kind of consider, is that the recession of being like 2 quarters of negative GDP growth is not the same thing as a financial crisis where the entire banking system is locking up and it's very difficult for people to get loans and participate within the economy through the issuance of debt. That's an entirely different issue that has taken place. So understanding that a financial crisis very well may not happen, and it's not the same as a recession, which is 2 quarters of negative GDP growth. So to separate these two can be somewhat difficult, especially when you kind of consider them to be the same thing, but they're not the same thing. So now here you can have a recession without necessarily having a financial crisis, right? Because like she said, we would never have another financial crisis in our lifetime, which is, kind of questionable. But really, when you think about the bailouts that the recent government actions have done as far as trying to deal with a recession, think about COVID, right? Does anybody really remember the COVID recession? Not really. It was like the shortest, deepest recession in history, and a lot of people don't even realize we went through one. Like a lot of times, I don't think people quite internalize the idea that the United States has gone through an insane amount of recessions and depressions, right? Like a recession occurs every 7 to 10 years. In fact, the expansion that we had seen after the great financial crisis was one of the longest expansions in U.S. history without receiving a recession or seeing a recession. It was almost like a self-inflicted wound when it came to the COVID recession that we had experienced, because we had essentially shut the economy down, right? Which created a recessionary experience. If you shut the economy down, tell everybody to not go to work, and you have unemployment rise significantly, and all of a sudden a bunch of commerce that was taking place is all of a sudden vanished, you are self-inflicting a wound of a recession. They created it. They created the recession and then came out with the bailout to fix it. It was like almost like dealing with the problem that they wanted to deal with as opposed to dealing with the problem that they didn't want to deal with, right? Like if a recession came and they're like, oh man, what do we do about it? That's a different story than, hey, we are creating this recession, forcing everybody to stay home, telling them to not manufacture, telling them to not distribute. This creates the recession that now they can come in and deal with, this, problem, reaction, solution. Now, something I found interesting just recently is reading a CNBC article talking about the possibility of a recession coming. And one of the quotes that they were using from one of these, analysis from some group or whatever, the statement that he made, what I thought was quite profound, is that he said that this is essentially a recession that is coming from the fear of what the administration is going to do with tariffs, or at least the threat of the tariffs. And I thought to myself, bang, right there. Credible threats of the tariffs were going to create a recession, right? Or could possibly, not saying it's going to, could possibly create the recession, which is a self-inflicted wound. Very much like the self-inflicted wound of COVID. The recession from then was self-inflicted and dealt with in a fashion that was planned. So if we get another recession from a planned administration tariffs that creates a recession, isn't this not very similar to the planned recession that was created in COVID? It's not one that is naturally occurring because of the economics, or naturally occurring like there's any kind of natural occurring anything. But it's not one that is been created from the economy functioning on its own. This is a recession that's being created because of a self-inflicted wound from tariffs, right? And again, once you create the problem, now you can step in and attempt to fix the problem, very much like they did with COVID. So if you have the stresses of a financial crisis on the horizon, just self-inflict the wound of a recession to give you the power to then deal with the financial crisis so that it never manifests itself. I'm not trying to say that's what's happening. What I'm saying is that's what happened during COVID, and it's very similar to what seems to be taking place today. Is that what's occurring? I don't know. Time will tell. But it certainly seems to be very reminiscent of that time and what it is that they had done. They see a financial crisis coming, and instead of letting the financial crisis hit, they self-inflict a wound of a recession. That way they have the powers to deal with the financial crisis that never does manifest itself. You see how this works? All right, I'm going to leave it at that, and we're going to go through reading some of these comments. I have about 10-15 minutes or so to break some of this stuff down for you. I propose they change the name from recession to retardation. Yeah. Who do you think is going to buy your home for pennies on the dollar? If there was ever going to be pennies on the dollars for one. All right, I thought it was going to be a silent recession. It was, well, the recessionless recession that I had talked about was coming from the COVID era, right? This is a new time that we are now meeting. Like, the recessionless recession isn't going to last forever. Right? The bailing out of the corporations and the incredibly low unemployment that was created from the COVID pandemic and the unusual exigent circumstances that denied the economy from falling into a recession, that will eventually run out. And the recessionless recession will no longer be an excusable reason for why we are not experiencing a recession. Right? There has to be a new reason that comes up. And so, like, as far as the idea of a recessionless recession that I had basically come up with back in COVID, saying we wouldn't experience one, that is fading away. And now a new reason would come up on why it is we either going to see a recession or why it wouldn't actually take place. Now, if there is bailouts to prevent the issues that come from tariffs and corporations are getting their subsidies or whatever that comes from, and we could see that as them bailing the nation out without actually having a recession, preventing a financial crisis. Like, again, I mean, it's just difficult to put into what ifs. What I am trying to do is look back at COVID and say, hey, how come we didn't get the recession that we had expected after COVID? And it's very much in line with what I was believing with the recessionless recession, but that is coming to an end. Like all that bailing out of the corporations, or essentially it wasn't even a bailout of the corporations. What it was a lowering of yields and the promise of buying corporate debt that had the markets going out there and front running the Federal Reserve and loading these corporations up with an incredible amount of cash by buying their incredibly cheap corporate debt. Now, again, that was 4 years ago. Things are going to be changing soon. So what we can see, or what we can have this belief of, is that there is going to be credible threats of tariffs that are going into the future, which is creating a situation in which that corporations are preparing for a slowdown within the economy because of this credible threat of tariffs. Right? This is a self-inflicted wound. This could create a recessionary pressure within the economy that then gives the corporations, or more of like the powers that be, I should say, the ability to then conduct themselves in a way that says, hey, we need bailouts, but we're not getting an actual bailout. You know? Think about it. If unemployment doesn't rise significantly, then most people are probably not going to be really worried about a recession. It's only when unemployment rises that people get pissed. All right. And it's not only, but generally that's when they really get upset. Recession means multiple quarters of negative growth. Yeah, that's what I said. If you can't prove negative economic growth, it wasn't a recession. Right? And that's why, like I said it, the way I did. It's a recession. Like, we could feel how slow the economy got. We can see and feel how painful it was, but we never had the label recession come across the headlines. We felt it as a recession, but we didn't get the labeling of it. It was a recessionless recession. Right? We didn't have massive unemployment and the corporations didn't get bailed out, but we felt the pain, right? People should only care about a depression. Are you still on the stock market or getting out? That's a good question to ask. I'm actually going to be bailing out of a good section of the stock market, but that's not because I am worried about the stocks going down. It's because I'm going to use the money for something. So I'm not getting out because of the worry of the stock market crashing or something like that. Although now probably wouldn't be the best time in the world to be loading up on even more stocks. But at this point, I haven't done anything and I'm still sitting in it. Right? So do you think stagflation is the norm of the next 10 years? I think that would probably be very common feature of the economy, is going to be somewhat of a stagflationary feeling, yes. All right. You never sell in markets during downturn, you buy more. Yeah, absolutely, Kirk. Like, I wasn't like, the plan to sell because of the market move was not in my mind. It was, I need the money for something else that I'm doing. So that would be the only reason, not because of the price move on it. And I did so well on my Coinbase stock right now that even with the dramatic move downward, it's still significantly higher than what I had paid into it. So, to me, it's like, I'm not that worried about it. All right. You buy, I'll watch. Dollar cost averaging loves all times in markets. Yeah, I agree, Kirk. I mean, I'm a big fan of dollar cost averaging to get into anything. You don't really notice it that much if you're putting $50 here and there, $100 there. Some people are going to do thousands of dollars dollar cost averaging. I'm not that good, right? So, but dollar cost averaging is probably the best way to get into anything, because you just don't really notice like the pain and the price move. Like, you throw $10,000 at something and the price drops, you feel that, right? But if you put $10,000 into something that you have been doing over the course of like a year or more, you don't really notice like the price moves as much. You don't even really think about it. Sell your original investment and let the profit ride. Yeah. I bought a bunch of inverse ETFs. Dollar cost average. You don't know where the bottom is, unfortunately. I totally agree. What do you think of a million homes being bailed out by government for foreclosure? Is that actually happening? I bought a bunch of inverse. Oh, we already read that one. What is an inverse F? Inverse ETFs, I would imagine that it goes completely opposite of a particular investment that you're doing. Like, say, for example, a lumber futures or something. If you buy an inverse to it, if lumber futures go up, the inverse goes down. If lumber goes down, the inverse goes up. So it's just like, basically the opposite trade of something. So maybe taking like a short position, whatever. Right, it's shorting, right. Wall Street Journal reported on housing. All right. I'm pretty new. Does dollar cost averaging basically just mean constantly investing in something despite how the market is doing? Yeah, that's a good way of putting it. It's generally speaking like you have like a once a month or once a week purchase, like on every Friday or on the 5th of every month or something of that nature. You make a purchase, $100 purchase or $150 purchase. You don't really pay attention to what the price is as much as the consistent purchasing of that particular item on a regular intervals. Now, by doing that, you'll end up with an average, right? So, like, you put all those purchases together and you'll have a number purchase. Like, say, for example, you were buying silver. You do it over the course of, 2 or 3 years. You buy 1 ounce of silver once a week, and then you take all the purchases and divide it by how many you have, and then you'll have your average purchase. So, in a lot of ways, people are like, well, you can do better if you time the market. But then for a lot of us out there, timing the market isn't exactly like the easiest thing to do, and most people suck at it. Dollar cost averaging then gives you the ability to acquire a bunch of it, but then have an average price. So you might have paid $50 for it, you might have paid $20 for it, but the average price is somewhere in there in between it all. And then if the stock ever moves way above or something of that nature, it goes up to a point that you feel that you can take the profit out. You can sell the whole thing knowing what your average on all of it was and not necessarily saying, hey, I need to time the market perfectly. You can also dollar cost average out. So once it moves up to a particular level, you start selling little bits once a week until it drops down and you dollar cost average out. So, your average on what you ended up selling it for might be a range between, 30 and 50, and then you figure out what it is your dollar cost averaging to get out was. So again, it's just like kind of a way of not necessarily making a big purchase all at once and then being like, oh my gosh, I lost money on this purchase. It was purchased throughout the entire year or something, so you have an average in there that you're more looking at. I don't know if that makes sense. All right, paintball $1.99. Thank you so much. How high could Bitcoin ETF go in 10 years? Oh, well, that's a what if, and it can go, who knows? I mean, speculation can landed millions of dollars into the future, but to try and put some kind of expectation on it of that nature, I think is very dangerous, because a lot of times people will be like, well, I had this expectation that it was going to go to $1 million, and so I put every dime I had into it, believing that it was going to go to $1 million with this expectation. And that can be very dangerous. It very well could go to $1 million, but then what if it doesn't, right? Now you're sitting there with this idea, is like, man, I really had planned on it doing that. So for me, I don't put an expectation on Bitcoin like that. I buy Bitcoin regularly and I have a goal in mind. I want to own one Bitcoin, one whole Bitcoin. Whether I get there or not, who knows? Dollar cost averaging once a month, every, couple of weeks or something, has given me the ability to now acquire what is very close to a half a Bitcoin. That's pretty cool. I don't even know what my average is getting into the Bitcoin. I've just been doing it for so long that now I have one. It's quite exciting to watch the Bitcoin price move up as fast as it does, and it's also shocking to watch it fall as much as it does. So for me to have very little expectation then gives me the ability to not have this anxiety over Bitcoin on whether or not it's going to go up or down, or if I'm going to lose my money on it or whatever. Having no belief of it and what it's going to do, and dollar cost averaging into it on a regular basis has been absolutely comfortable for me, and I'm watching it move up in a way that I'm thinking, dang, I am so glad I am in this, right? But again, I don't have any idea on where it's going to go, and nor do I really even care, you know. All right, the point of BTC is to get out of dollars and into another currency. The point of ETF is to stay in dollars. No thanks. Yeah, absolutely, all-nighter. That's a great way of looking at it. All right. Wife wants a cottage. Should I wait as the market should correct itself soon? That would be difficult, Anthony. I mean, I would be very concerned that if you are in a position in which that the housing market was to fall dramatically, that gives you the opportunity to have buying opportunity, that you are going to be competing with a bunch of other people who have the cash. So if you have the cash on hand, then I'm thinking, okay, well, you probably might be able to find yourself in a better position to pick up that cottage for a cheaper price. But in my mind, the way I'm seeing it is that unless we go into an actual financial crisis that denies people the ability to get mortgages, you're going to be competing against a bunch of people who are sitting on the sidelines right now just wishing and hoping and dreaming and praying for there to be a little bit of a price difference or a price drop so that they can jump into this game. Right? Think about it. Every day that goes by that there is less transactions happening within the housing market, that's another group of people out there who are not buying houses, who wish they could, and now they're sitting on the sidelines building the demand, the invisible demand. Right? Because that demand is not showing itself because they're not in a position that is capable of buying. If the capability of buying presents itself, they will show themselves, and all of a sudden you're going to find a lot of demand out there that's been pent up and just not visible. Right? Every single day that another transaction doesn't happen, that's another pent up demand sitting there on the sidelines waiting. Right? I don't know if you're going to get your opportunity. Right? We are finding inequality is going to grow massively going into the future. There is no stopping that. If you want to stop it, it's going to be painful and it's going to be miserable for people, and it's going to take a very long time. Otherwise, we're going to have expansion of money supply. New money coming in is going to create inequality. The rich are going to leave the poor behind. The wedge is going to get driven deeper, and the way that you can see it is through capitalists, the people who own stocks and bonds and deploy their capital for a return, and the property owners. They will separate themselves from everybody else. There's no returning. Like, people are like, oh no, you can shrink the inequality. No, you can't. You can create a situation that appears to be slowing the economy down, crashing stocks, crashing assets. But what that does is it separates the rich even more, as they will deploy their cash into buying those assets at an incredibly cheap price. And you want to see the rich get richer, just wait for a recession. Right? After a recession, the rich will be far richer than they were going into it. When a recession happens, everything is going on sale. And unless you have the cash to deploy at that time, you're going to be screwed, and you're going to watch those rich people buy up all the assets for pennies on the dollar, separating themselves even more. Recessions don't fix anything. They make the problem worse. Right? But the problem that we see is not one that can be reversed. Right? See, a recession clears out a bunch of bad debt, bad undergrowth, gives the ability for the economy to have green shoots. But what it's really doing is it's giving the rich elitists the ability to buy all these really beautiful assets that we built from using debt issuance that has now gone bankrupt, that we can no longer afford. We have to let it go, and they pick it up for pennies on the dollar. That's what's happened. That's what a recession does. It's the harvest season for the rich. What time is it? Alrighty, guys, I got to go. I'll give you one more question here, and then I got a jet. All right, the rich get bailed out first, always. I have to try all night or hide a cottage cheese. All right, or a pandemic. Okay, recession sounds like a poor guy's chance to level up too, if he doesn't fall into luxuries. You're absolutely right. A recession is that, but most people are not aware. enough to position themselves to deal with the recession properly like that. Most people will go into recession losing their job, having an extreme amount of debt, and suffering the consequences of bankruptcies and failure. That's how most people will end up facing it. Now, if you are very well aware and you are paying attention and you are disciplined, then you can hunker down with the cash and wait for that recessionary pressure to hit, and then jump into the game and buy up these assets for pennies on the dollar, very much like the rich do. But how long do you wait? How long do you wait? If I waited to buy a cheaper house, how long would I have had to wait? Like I'm 3 years into this house. 10% of the way, more than 10% of the way into the purchasing of it. Okay? Now, if I had waited to buy a house that was going to be cheaper, not only would I not be able to buy the house that I am living in today, but I most likely would have had to leave the area that I am in today, even with the income that I have, because I would not afford the down payment or the interest payments that are now on these houses here. How long are you going to wait for that recession so that you have your buying opportunity? I'm not saying that you shouldn't do it. What I'm saying is, how long are you going to wait for that to be your plan? I'm not planning for that. Like, I am planning to deal with that situation when it comes, and hopefully have some money to deploy into buying assets that are, pennies on the dollar if I can. Right? But to try and plan for that, a guaranteed outcome, is probably going to leave you suffering with failed opportunities and missed chances. Okay? Take it into consideration. I'm not saying that you shouldn't plan for something like that and to be able to deal with it. Absolutely. I mean, consider the idea. But to plan for that sort of outcome when it's not occurring today, then you might want to think about something that you can do today that is actually happening. So many people want to know about how it is that they are going to die, or how it is that everybody else is going to die, so that they can take advantage of a situation that has not yet occurred. Right? Like, it's better to look at the situation for what it is and then try to deal with it for what it is. People are like, how are you planning to deal with tariffs? Tariffs that haven't happened yet? You can already see that everybody else is out there doing something, preparing for tariffs that have yet to occur. Maybe look at that, right? And then you can start considering what it is you need to do. I mean, everybody's going to be different. I think about the guy who's concerned about lumber tariffs causing lumber prices to move up, and he is going to subconsciously, whether he knows it or not, is going to start increasing the price on his bids, just because of all the news programs and everything that he is seeing out there. Alrighty, guys, I got to go. This was good. I enjoyed hanging out with you guys today. We got 407 people watching with 67 likes. Thank you so much for hitting that like button. Capitalist in good times, property owner in bad times, maybe. Yeah. I love old Charlie Munger YouTube videos. Charlie was smart as hell. Rest in peace, Charlie. Huh. Okay. Have a blessed day, folks. Absolutely, you as well. A good depression will lower prices. No demand equals lower prices. Corporate dream, own everyone's home. American dream, own an egg. Oh, thank you, Model American, for the $4.99. Will banks become more lenient if we have some form of market correction? Example, business loans. If we have a market correction and you start seeing stock prices coming down and you start seeing interest rates going up, I very seriously doubt that you will see banks getting lenient during that time. What will happen is that government programs will come out to try and attempt to make the financial markets or the financial system more lenient. But ultimately what's going to happen is fear and anxiety is going to start ripping through the economy. People are going to say, hey, I'm not going to deploy my money unless I am going to get a reward for this because of the uncertainty that's happening out there. And the banks will be in the same position as that, saying that if we see fear, if we see recession, if we see problems and slowing down within the economy, then we are going to demand a higher return for our money, because most likely you're not going to pay it back. And if we're going to take that risk, we want to be rewarded for it. So no, I don't see that they would get more lenient. I mean, I can see where government might step in to create programs to make them more lenient. But again, that's to try and offset the economic forces that are taking place trying to slow the economy down. All right. Have a great day, Simon. You as well. Just got back from Costco. No eggs available. No more wars. All right. Credible threat theory for the win. Yep. Thank you very much, guys. You're all awesome. Thank you so much for all the support that you guys have had for the Uneducated Economist as I blast through the credible threat theory. I know a lot of times that I come out here and I can get really jacked up on the coffee, get very excited about how things are going down right now. And I also understand that I am delivering a message that is far different from anybody else's out there. And I appreciate you guys sticking it out with me. We have, stuck to our guns with this theory for years now, and I'm not deviating and I'm not changing because this is what I really feel, I believe, is taking place out here. And so as we continue to break down the credible threat theory, as we find evidence of it taking place out there, very much like, even this commentary coming from this, financial analysis saying that the administration's threat of tariffs is creating this recessionary pressure within the economy. And I'm thinking, man, that isn't just such in line with the credible threat theory, All right, you guys are awesome. Thank you so much for being here. Uneducated Economist, you let me know.